So we're going to be starting and looking at Chapter 3 today. Chapter 3 takes what we have done with the T account and physically is putting it in a document that is going to allow us to be even more efficient than a T account. Okay? So before, we've taken a look at any transaction that's happened, and we've made 2 T accounts, one for each account that's being affected. But as we saw in some of our mastery problems from Chapter 2, after a while, that T account can get pretty long and get pretty big. And when we looked at our challenge problem, it was hard to go through and see an individual transaction because you had to match dates. And if you had 2 transactions of the same date, it made it even harder because you're like, well, which one is the debit and credit of each one? So we're going to be using a new accounting device called a journal. Okay, and a journal is going to be where we go through and record our transactions. And again, all of those are new words for us for accounting because you didn't know that prior to your first day of class. When we use a journal, we still have to keep our concept of our accounting equation still needs to stay in balance of assets equals liabilities plus owner's equity. We also need to think about whether or not the account is increasing or decreasing. So all of those, that thought process and that decision making that we've done before is going ahead and being used, but just in our journal. So what I want to do first is I just want to take some time to physically look at a journal. In the upper right-hand corner is always going to be where we'll have a page number. And what you will find is we will always start a new journal for each month. Okay? So physically, journals is a piece of paper, but we're just doing it online. So online, typically you can go as long as you need to for a month, but physically on a piece of paper you're limited by space, so if that helps you to understand a little bit. I could have 1 month that takes 2 pages, though. Does that make sense? Or I could have 1 month that only takes 1 page. But what's really important to note that is at the start of every month we always start a new journal page. And the pages are going to be consecutively numbered. So this is page 1. The next page that this business would use would be page 2, page 3, page 4. It just helps us to keep track of information. So the page number will always be in the upper right. You may have some assignments where you need to put the page number in and physically write that in, so just as a heads up. And then we're going to take a look at moving left to right on our journal. So right here I have my date section, and there are 2 columns here for the date. On the left-hand side here, on this big spot, would be where we would write the month. So we would, most of the time, we're going to abbreviate our month. So for September, I'd write SEPT. And when you start typing it in as a word, you will find it will give you the abbreviation that they're going to use for the month. So again, this is going to be where we write the month. And you only have to write the month once. Because remember how I said every month you're going to start a new journal page? So there's no reason that you would need to write September, September, September each time, because that would be a little bit repetitive. Would you agree? So at the top of each journal page you would write the month, and then you would know everything below that is going to be that same month. Now the second column right here for the date is going to be where we put in the physical date. So for example, if I was recording a transaction for today, I would write OCT here for October, and then I would put a 5 here. So this would be the number. And now what you need to realize is every transaction has to have the date for it. So I could have multiple transactions on the same date. So I could have 2 transactions dated October 5th, right? Think about your family. Do your parents buy more than one thing in a day? Using their debit card, check card, or whatever it may be. Same thing a business would do. They could have multiple transactions happening on a day. But what we want to find is our journal is going to be chronologically listed. What does that mean? The beginning of the month should be at the top, and the end of the month should be at the bottom. They should not be out of chronological order. Okay. So our next section I have right here is where we would put in our account titles. Our account titles are like those things that I have written on the board, like cash, prepaid insurance, supplies, accounts receivable, Forrest Grassel, Mrs. Grassel Capital. All of those are account titles. And you will recall every business has what is called a chart of accounts. Chart of accounts is a list of accounts that that business is going to use. So a business, if you're going through and working for a business and recording transactions, you're not going to go through and all of a sudden decide, hey, I want to have postage expense. You can't do that. You want to go through and make sure that you have everything that's on your chart of accounts, and those are going to be the only accounts that you use, which is why you'll find on some of your assignments they'll go through and give you a list of these are the accounts that you're going to be using. And they're going to be pretty standard what we'll be doing. So account titles will be written there. Now doc number. Okay? Doc number stands for the source document to show that you've actually had this transaction. So if I paid cash for rent, okay, so I'm paying cash, paying for rent expense. My two accounts is going to be cash and rent expense. Rent expense is going to be debited and cash is going to be credited. My source document for paying cash for rent is going to be a check. Okay, so my source document would be C, and then the check number that I physically would find on the check. So you will find, this is one of my greatest tips for you. Are you ready for this good tip? I like to give this one to you. If your source document is a C, C stands for check, also stands for cash, also stands for credit. Right? So if you if your source document is a check, cash has to be credited. C check, C cash, C credit. They all go together. So then you just need to figure out what is going to be debited. Does that make sense? So that would be an example of one type of source document would be a check that you'd be most familiar with. The other type of source documents that we could have a sales invoice. Okay, so a sales invoice would be abbreviated as an S, and that would indicate that there was a sale on an account. So Kate came in and she wanted to go through and get a golf lessons for me, but she wanted to pay me later, so I did a sale on account, and the sales invoice would be my transaction. So then I would be affecting sales and then, of course, accounts receivable for Kate. Now, another type of source document that you're going to see is going to be your receipt. Have you ever gotten a receipt before? Jordan's lying to me. He's saying never. Anywhere you go, they're going to offer you a receipt. Whether or not you're paying gas at the pump, walking into Kitchup, going to Don's, buying something at the Thunder Zone, they're going to say, would you like a receipt? If you physically pay your school fees, the school always will issue you a receipt because they're not going to accept cash without giving a receipt. And the receipt number is going to be R, for standing for a receipt, and a consecutive number. So now when we take a look at our sales invoices, our check numbers, and our receipt numbers, they're going to be consecutively numbered. So for example, if I write out check number 101 for rent, what's my next check number? 102, right? And then I'll have 103 and then 104, right? For all of my check numbers, they're going to be consecutively numbered. So you should not find that you don't have a C102. Because if you didn't have a C102, then you probably missed a transaction. We're not taking into account if they made a mistake and threw out a check. We're not going to have that happening in our happy accounting land. But we do need to realize all of our source documents are going to be pre-numbered. Okay, so we've talked about a check, we talked about a sales invoice, we talked about a receipt. The other thing that we could have is going to be our purchase invoice. Okay, and that's going to be when we buy on an account. If I buy something on an account, you could find it that way, or a memorandum. Okay, a memorandum is just going to be a short note between us and the other business explaining what's going to happen. So source documents need to be filled in on there. And you will find, as you journalize transactions, it's very easy to take a look at your source documents and then analyze to see if you have the correct accounts affected. So a lot of times when you're doing work and you're having something's not coming out, and I'll come and look at it, your transaction, I'll say, hey, your source document here is C13, but you're not affecting cash. So we know that's a problem. I don't even have to go back to read the transactions. So the source documents are very important. Okay, so that is also something we're going to learn about. Then we get over here. This is the money part. Okay, these are our columns that we're going to be putting in our values of our transactions. So when we take a look at our columns, we have general, debit, and credit. Okay, general debit and credit is going to be where we put any information that does not pertain to a special column. It's hard for me to give you a definition when I have another definition within it. So here's a special column. You ready? Sales. This is a special column. Why? It actually has an account title to it, right? We have an account called sales. And notice that we have only sales credit. Why wouldn't they give us sales debit? Why? I agree. Right side of the accounting equation. Now think about it. In our happy accounting land, I always like to say we have a happy accounting land, none of our customers are going to return anything right now. Eventually they do, but right now we're staying in happy accounting land. If I gave somebody a golf lesson, could they return it later? No. So we don't have any products that people are going to return. So anytime we have a sale, it's always going to be a credit. So in our journal here, we have some special columns, and these special columns are truly columns that are used a lot. So in a business, we hope to have a lot of sales. Would you agree? That's why we're going to have sales, and we're only going to do credit because we don't have to worry about sales debit. We could in the future have a mistake that we need to do sales debit, but we're not going to have a special column for it. And now my last two columns here on the end is going to be cash. Okay? Would you agree a business is going to do a lot of things dealing with cash? Okay, so I have cash debit and I have cash credit. So these three last columns are called special columns, and they're special because they truly have an account title on the top of them. Now, when I go through to use this journal, what I need to realize is anytime I journalize a transaction, I'm always going to have two accounts, paid cash or rent. Okay? So my two accounts are going to be cash and rent. Now, the next type of question you have to ask yourself in order to journalize this transaction or record this transaction is, of those two accounts, is there a special column for any of them? For cash or for rent expenses? Is there a special column for one of them? For cash, right? So what does that mean? I don't need to write the account title cash here. The only thing I would need to write would be rent expense. Now, does rent expense have a special column? No. So, therefore, if it doesn't have a special column, it'll go here either as a general debit or a credit. What we need to remember about each transaction is you have to have a debit and a credit. Okay? So we're going to go through and take a look at our transactions and figure out how it goes onto our journal, record them with our debits and our credits with our source documents. And now this is one of the things that I need to tell you. How you journalize is important as the fact that you have it done. And this is what I'm trying to say. I'm going to go through and tell you, you work from your journal left to right, top to bottom. Some students, when they try to get their homework done quickly, they will randomly go through and fill in all the dates, and then they'll fill in all the account titles, and then they'll try to go over and do your amounts. That's not the proper way of doing accounting, because if you get interrupted in between, you're not going to know where you left off. So what we need to do is we take one transaction at a time, and we work in our journal from left to right. That's really important that we do it that way. Because if you do it incorrectly and things don't work out, I'm going to tell you, I can't help you because you didn't journalize it correctly. I will always try to help you, but if you have it done not following the proper procedure, it makes it more difficult. So let's go ahead and try to record these transactions. Go ahead and get Applia back up and ready to rock. So for this assignment, on the very top of Work Together 3-1, it says a journal is given below. Your instructor will guide you to the following example. Norm Dermer owns Dermer Copy Center, which uses the following accounts. So they give us the accounts that we can use for our transactions. Our transactions are April 1st and 2nd. And on the very bottom is our directions that read, journalize each transaction completed during April of the current year. Use page 1 of the journal. Source documents are abbreviated as follows: C check, R receipt. So I'm going to double check. My page number is already recorded on there. The first thing I do is I'm going to fill in the month. APR is going to be my abbreviation for April, and I don't have to worry about putting a period on there. So my first transaction reads, receive cash from owner as an investment, $1,500, R1. Carson, what are my two accounts that are being affected? Cash. Say it again, I just couldn't hear. Which one? Okay, so we have cash and Norm Dermer Capital. Okay, so the question you have to ask yourself, is there a special column for cash? Yes. Is there a special column for Norm Dermer Capital? No. So what I need to do right now is I'm going to put the date here of the first. And because there's a special column for cash, I don't write that in the account title, but I do need to write Norm Dermer Capital in my account title. The next thing that pops up moving left to right is going to be my source document. And when I read the transaction, it tells me the source document is R1. So what I need to do, I need to realize right now, Norm Dermer Capital is what I'm recording in the general debit and credit column. Am I debiting or crediting Norm Dermer Capital? Say it again. We are crediting because we have more owner's equity because of this transaction. So I'm going to go ahead and credit this $1,500. And I can just type in 1,500, and it will put in the .00. But I need you to realize this last column right here, where my fingers are right now, this is the cents column. This is going to be my hundreds columns, and this would be my thousands columns. Okay, so just so you see how those lines will come up. Now, what was my other account, Carson? And am I affecting it as a debit or as a credit? Try again. Debit, because this one right here is a credit, so I need to have a debit and a credit. So make sure that you have it in cash debit for $1,500. Now, you will notice I don't have to use every spot here. Do you see that? Some of these spots are going to be left blank, and that is totally fine. Transaction number 2. Paid cash for supplies, $375, C1. Kyle, what are my two accounts? Supplies and cash. Do I have a special column for supplies? Do I have a special column for cash? Yes. So because I don't have a special column for supplies, that's what I'd have to write my account title. So I'm going to put in there the date, and the date is the 2nd. Supplies, my source document is C1. Kyle, what is happening to supplies? Am I debiting or crediting? Correct. I'm going to debit supplies of $375. So therefore I have to credit cash $375. Go ahead and check your answer on your work together. I got 100. You got 100 also? You did not. Your account title's incorrect. It's supplies. No, because you have a special column for supplies, you don't write it there. Or because you have a special column for cash, you don't ever have to write in the account title. Go ahead and try it on your own. So work together 3-2. It is on for you. If you hit refresh, you should see that come up. Basically, we're going to go through and do the same thing we did before, but we have a couple different transactions. And what we have in 3-2 is we have transaction on April 5th right here. Bought supplies on account from Palm Supply, $500, M1. M again stands for memorandum. And a memorandum is basically a note between you and the other business stating what happens. So when I take a look at April 5th, bought supplies on account from Palm Supply. Kate, what accounts am I going to be affecting using that one? Yes. So we have two accounts, supplies and accounts payable, Palm supplies. So Kate, is there a special column for supplies? Is there a special column for accounts payable, Palm supply? No. So this is a transaction. Ladies and gentlemen, listen please. This is going to be getting you lots of points off. Because this transaction affects two accounts and neither one of those accounts have a special column, you're going to need to write both of them. Okay? And when we need to write both of them, which one goes first? Caleb, stay with me. You're not supposed to be on your own. You're supposed to be in work together. Okay? Which one goes first? The debited one has to go first. If you list the credit one first, it'll be marked incorrect. Okay, so we have supplies and we have accounts payable, Palm supplies. So, Kate, which one is going to be debited? Yes. So I'm going to put the date of the 5th. And I'm going to put supplies is going to be my account title. Source document is M1. And then that's going to go for $500. Now, you are going to have an assignment where you have the ability on the second line to put the date. You do not put the date on the second line if a transaction takes more than one line. You also don't need to write the doc number twice. You only write it on the very first line of the transaction. Okay, I'm giving you as a heads up. At the end of this chapter, they'll give you an opportunity to fill that all in. So all we need to do is go ahead and write in accounts payable, Palm supply. And notice there's an accounts receivable, Palm supply, and an accounts payable, Palm supply. Make sure you have the correct one chosen. And then you would record both of those in just the general column. Accounts payable. ACCTS. It's shortened up. If you look at your chart of accounts in the directions, it'll give you that. The 7th, paid cash for insurance. Ellie, what are my two accounts?
Cash and prepaid insurance.
Is there a special column for prepaid insurance?
No.
Is there a special column for cash? What do we write in the account title?
Prepaid insurance.
Perfect. Source document is C2. Tanner, what was my hint on the C's?
That cash needs to be credited if it's cash.
Correct. So we know if cash is being credited, what has to happen to general column? Has to be debited for $300. The 9th, paid cash in account to Palm Supply, $250. Jory, what are my two accounts for the 9th? Is there a special column for either one of them? Okay, so what goes in my account title? Thank you. What am I affecting in the general column? Yep. And then what's my credit? Okay. Go ahead and check your work on your work together.